Good afternoon, everyone. On behalf of Softlogic Stockbrokers, I would like to warmly welcome all of you for our investor webinar on Sri Lanka's tourism sector. To join our discussion today, representing John Keel's Holdings Group, we have with us Mr. Suresh Rajendran, the president of John Keel's Leisure. To give a brief intro on Mr. Rajendra, well, Mr. Rajendra has over 30 years of experience in various sectors, including tourism, finance, real estate, and business development, both in Sri Lanka and overseas. And also, he currently serves as a member in the group's executive committee of John Keel's Holdings. Mr. Rajendra further serves as a director of Asian Hotels and Properties, Union Assurance, TransAsia Hotels, and in many other unlisted entities in John Keel's group. So, Mr. Rajendra, thank you so much for joining with us today, and hope our audience will have a very insightful session on the Sri Lanka's tourism industry. Today's session will be moderated by Natashi Fernando. So I would like to hand over to Natashi now to start off the proceedings. Natashi, over to you.
Thank you, Shadini. A very good afternoon to you all. So I'll start off by giving a quick overview about the prevailing situation of the tourism sector in our country. So we know that tourism sector is becoming a hot topic these days. As we come to the latter part of this year, we are seeing a surge in arrivals as of recent, where November month alone recorded arrivals over 150,000. With that, the year-to-date arrivals mark around 1.3 million, and the industry is optimistic in reaching 1.5 million arrivals by the year end. Also, there are government initiatives as well taken to boost the sector, where free visas have been approved to be given for selected 7 countries, and amongst them are our main source markets that had high arrivals as of pre-COVID and even now. So they have the potential to contribute more. And also specifically if you look into the JKH Leisure segment, John Keel's have 12 resorts with 8 situated in Sri Lanka and the rest in Maldives. Overall, they have a room inventory of over 1,400. And when looking into the Cinnamon City hotels, they have Cinnamon Grand, Cinnamon Lakeside, and the upcoming Cinnamon Life, which is a game changer. Currently, Cinnamon Grand has the largest capacity with over 500 rooms, followed by over 350 in Cinnamon Lakeside. Moreover, we are seeing Cinnamon Life is also upcoming, which would get completed by the end of next year probably, and has a massive capacity of 800 guest rooms, along with a spacious banquet hall and a space that would get allocated for casino operations. So those are the tourism sector highlights. So this is a quick reminder for the audience. You can drop in any of the questions you have when the discussion is over. We would appreciate if you drop in the questions when the discussion is over. We would be more than happy to answer your questions. So without further much delay, we'll start off with our Q&A session. So, Mr. Suresh Rajendra, my very first question to you is, who are the main source markets that give business to the Sri Lankan resort arm of John Keel's?
First and foremost, Natasha, thank you very much for inviting me. It's a pleasure being here. I'll be very, very happy to share some thoughts about the industry with the audience and yourselves. Starting off with the first question, yes, for the entire nation, India has become or is our biggest market. India contributes about 20% of the overall arrivals to Sri Lanka, and that's about what it constitutes within the John Keel's clientele as well. And it has been the case even pre-COVID. But during that time, we had China as a big market, but we have not seen the surge in China yet, as we speak. Russia, the Russian Federation, has also now emerged as a substantial market, specifically in the resort sector. Russian share on the market is possibly around 15 to 16% of the market share now, and it's quite a steady market. UK and Germany contributing about 8% each, but that's possibly around about how the market is broken up, and possibly with winter coming in, you would possibly see a greater influx of the Western European and Northern European countries. But that's the tourist origins into Sri Lanka and into JKH.
Thank you, Mr. Rajendra. So moving on, how would you evaluate the spending scope of Indians and Chinese travelers? We are seeing a surge in arrivals, but are we generating sufficient earnings from them? Would we have generated more earnings if the source markets were other Asian countries?
Well, I think with regard to the Indian market, if I take the Indian market specifically, because that's the market that is in Sri Lanka, we are now seeing the high spending upmarket Indian travelers into Sri Lanka as well. Like it's about the product that we are able to offer. Yes, and the Indian and the Chinese market do shorter stays as opposed to the old traditional Northern European, Western European market. But they actually do the round trips, the excursions, and the whole gamut of the tourism offering that we have here. So I would not basically say that there are any lower spending market. We are seeing the high-end market as well coming in. And I think it's really the potential that we see from these two market segments and also the rest of Asia that really is, what brings up the opportunities for this country. India itself has got something like, I believe, 90,000 seats into Sri Lanka a week. That's a huge market segment. And from all parts of India, literally every city is now connected into Sri Lanka. And we are seeing the high spending market. The Chinese market has always been is a huge market. It comes in big volumes. They necessarily are not the biggest of spenders, but they do excursion travel and they do a lot of round trips and all that kind of stuff. And we are hopeful that we will see the Chinese market actually coming in during the winter. The rest of Asia is now growing. We are seeing Bangladesh, we are seeing Pakistan, well, more than Pakistan, Bangladesh as a growing market, and also with connections now from Malaysia and Thailand. Asia are now flying every day. Every day, from both these countries, we are seeing a growth in those market segments as well. So I think it all, offers very good opportunities. And with the tightening of the traditional European market, the growth in the Asian market and the near Asian markets are very encouraging.
It is really interesting. So, what strategies have you attained to make the John Hughes Maldivian resorts more competitive?
Well, our resorts are all refurbished and redeveloped prior to the COVID. So they are in very good shape, and they have been and they do generate extremely well. We have been able to be ahead of our competitive set in all our sectors out there. Velifushi, which is our newest addition, is an upmarket resort competing very well in that category of the market. Hakura is more honeymooners and kind of resort. It's a beautiful resort. We've annexed another island for excursions and so on and so forth to Hakura. Don Valley, our third resort is Surfers Paradise, located very, very close to Male. So we have specific strategies for each of our resorts, all our four resorts, and happy to note that we actually are performing above the comp set. Maldives itself is challenged a little bit because the European markets have not been performing very well. Though there's growth in Maldives, the high-yielding European markets have not performed. We are again seeing the growth coming from the Asian markets. So Maldives has got its own set of challenges. But with regard to our particular resorts, we are doing well against our comp set, and they are positioned very, very securely into their market segments.
So, are there any major capex plans lined up for the John Keys resort arm, which includes both Sri Lanka and Maldives?
As I said, in the Maldives, we have actually spent and done up the resorts. So all our resorts are in good nick at the moment. In Sri Lanka, we have been cautious. We have been spending as we need to. So we have actually been spending consistently but carefully. No, we do not have any major redevelopment or expansion plans in our existing resorts. Though we have got some new properties, as you know, being under construction, but there will be consistent spend into the products because expenditure you have to spend on a capex to keep the product in good shape and competitive. So there is consistent spend, but no, we do not have any big capex plans lined up.
Thank you. So, what's the way forward for the Cinnamon City Hotel properties? From where do you see the growth coming in for John Keys City Hotel segment?
Well, Colombo has been getting more and more attractive, and I think as Colombo becomes a more entertainment hub, as we want it to be positioned, we will see Colombo growth taking place. Colombo has, I mean, compared to all other Asian capitals, have very few rooms. We just got something like 6,000 rooms. We're comparing that to 10 times that in other other Asian capitals like Malaysia, Kuala Lumpur or Bangkok, anything like that. What Colombo really lacked was for people to stay in Colombo and not just use it as a transition point. So that transformation is quietly taking place. Colombo is becoming attractive, and also with these new brands, international brands coming in, that gives Colombo also an address. So with regard to our Colombo properties, we are very excited with Cinemalifecin that will get open next year, and that will also become huge prospects into the market. Yes, there will be new segments in terms of entertainment. Yes, we spoke about the casino and all that kind of thing that will in itself attract a market share. So we believe that we will see a huge surge in the Colombo market, but we actually are seeing it with the Asian markets growing like the Indian markets, where the Colombo capture rate has increased from about 35% to almost around 50% now.
Okay. So, what is your thinking about the implementation of minimum room rates at the local city hotels? Have you already experienced any negativity stemming from these measures?
Well, reading the papers today, it might not be there for too long, or that's what we read. Well, we've never been an advocate of any kind of, control mechanism being brought in. We always believe that, economics and market forces will take place, and, people will sell their products at the right price. However, I think the minimum rates were brought in with a good intention of, creating some kind of price stability. It has created price stability. Give it credit to where credit to where it's due. It's kind of the rates have been stabilized in the market, but we do see a drop in the numbers, and that needs to get analyzed carefully, because where we could be missing out is on the MICE market, the meetings, incentives, conference market, which is extremely price competitive, and we could be losing it out to other destinations like Kuala Lumpur or Bangkok, which are very much cheaper in the five-star category. So that's something that we need to be conscious about. So overall, it's a mixed reaction. I think it's I don't want to prematurely draw a conclusion. Whilst it has established some kind of pricing and the prices have gone up, we've seen a drop in arrivals. So overall, to the city, it's not the greatest of news to see less number of people, because people do spend not only in their rooms but also in their travel, in their spend, in their eating out, in their consumption, all that kind of thing. So you need to keep the numbers up. But I think overall you don't want to make a premature conclusion on it. But I think the sooner we get back to the market forces being active it's better.
Adding to that, any comments on how the normalized US dollar terms would be affecting the earnings aspect?
Well, we quote in US dollars. So any kind of, exchange devaluation, it works to our benefit in terms of our revenues. But against that, we've run into inflationary conditions in the past, and our price to cost bases are very, very high. But that's been very, very tight on margins right across the board. So any kind of, the valuation actually to some degree is beneficial on the top line.
Thank you. So, what are the major challenges faced by the Maldivian resort arm? And could you briefly explain our audience on taxation and other regulations at Maldives which impact the leisure industry?
Okay, so in the Maldives, right now, there is a little bit of a drop in the European markets, but that's because of, the situation out there in Europe. But I think that will rectify itself. It's being compensated by the other Asian markets, but overall, Maldives has had a 13 or 14% growth in arrivals during this calendar year compared to the previous calendar year. And mind you, previous calendar was also a good year in the Maldives, where they had something like 1.7 million arrivals. So there is growth, but the growth has actually come from the Asian markets rather than the European markets. And generally, the Asian markets have a shorter stay than the European markets. But the other challenge that the Maldives faces is the guest houses. Maldives also, given approval for guest houses to operate this as opposed to resorts. Now, guest houses are operated in civilized in islands which have got public living there as well. The difference is guest houses don't get liquor license and so on and so forth, but they are much cheaper and much more attractive in terms of pricing. And we see something like 900 guest houses with about possibly 15 to 16,000 rooms that have come up in the Maldives in the last 2 or 3 years, and they have shown growth. So that's basically taken some share of the market share from the resorts to the guest houses. There's also been new taxes that have been brought in. I mean, the GST was increased in January last year from 12% to 16%. So that's basically had an impact on the top lines. They also brought in a minimum salary for Maldivian staff. There was no minimum salary previously. They brought it up to $550 per month, which has brought the cost to the employee, the incomes up, and which has basically adjusted the entire market, including the expatriate employees as well as a result. Then on top of that, the fuel cost have gone up. Now it's almost $1 a liter compared to possibly 65 to 70 cents a liter 1 year ago, 1.5 years ago. So there are cost impacts there, and in the Maldives, when the price of diesel goes up, everything goes up because it literally runs on diesel, whether it be your electricity or your water or something like that. So cost bases have gone up. So Maldives has become challenging. Um, so, but the numbers have shown improvement. The rates are showing improvement, but there is more competition coming in. As I said, the guest houses are there, and the cost base is something that is also been growing. Uh, so all told, I mean, 10 years ago, there was no income tax. There was only a bed tax that was there. Now there's, green tax and income tax and various things. But that's all what countries need to do anyway, for their economies. But I would think on the context is basically the cost base has gone up, and that's possibly like the biggest challenge out there in the Maldives.
Okay. So, talking about the gaming segment, we know that new regulations have been launched for the gaming segment, which may be of greater advantage for John Keels under the Cinema Life project in order to commence a casino at the premises as pre planned. Do you think these regulations are of any help to boost tourism, and are there any further laws needed?
Okay, so first and foremost, let me clarify when you talk casino and junkies. Junkies is not going to operate casinos, right? They're not going to be in the casino operation. We're only looking at renting out a space for a good international casino operator so that they could operate there, and then we can get all the the benefits that come out of it in terms of into our hotels, both at Cinema and Life and into the rest of our Colombo hotel chain. So having said that, the regulations which were framed and brought in last year really now brings in, creates a platform for big time operators to come and operate in Sri Lanka, because now Colombo becomes, or Sri Lanka becomes, a regulated environment in line with Singapore or any other country that has casinos and properly regulated. So regulations are not what we call gold standard, but the regulations are good and they're sufficient. I think it's a very good starting point, and it is, as we can see, attracting the attention of the big players to come and invest in Sri Lanka and operate in Sri Lanka. So I think that is a very, very positive thing, and we would see some of the bigger players coming and operating in a very well-regulated, controlled environment. And I think Singapore is a standard to follow, and we know what it did to the economy of Singapore also once they brought in a properly regulated casino environment there. And the two IRs opening out as well. This will augur very, very well for the city, because it actually gives the city the purpose for people to travel other than as a resort destination as well, to come to the city of Colombo, and that will also add to all the other benefits like shopping, to F&B incomes and all that kind of thing. So I think that's what it is. As for further regulations, I think it will evolve with time. It will evolve with the needs as it is. But currently, the regulations in place to create a framework for a well controlled environment in terms of operating.
Okay. What is your view on the growth prospects for Sri Lanka's tourism? Are we competitive enough to attract 2.3 million arrivals by next year? What are the positive initiatives which are already in place to boost the arrivals number going forward?
Okay, in terms of numbers, we can be exponentially more than 2.3 million. We can, look at Bali itself, it's got 5, 6 million. Some of the other capitals have got 10 times us. Look at KL, 30 million, Bangkok, and all that kind of thing. So this 2.3 million is minute. What we didn't have is, what the offering that was there, and that's what we had to do to create. We didn't have offering, and we didn't have a very, very what do you call a targeted marketing campaign. These are two, I think, key requirements for the country. And if we can get the tourism marketing campaign back on the streets, create awareness of what we have in Sri Lanka in totality, the diversity of our products, this country is amazing in the context of what we can offer, and all within a very, very contained area. I think the prospects are huge. It's massive, and I think in my mind, the 5 million tourists by 2027 or 2026 or whatever it is, it's very, very gettable. 27, it's very, very gettable. And next year for sure, 2.3 to 2.5 million has to be our target.
Thank you. So there are several new visa categories in the pipeline to facilitate the port city staff, foreign relatives of Sri Lankans and foreign students, etc. Since port city is going to be our main international trade hub, how effective would these initiatives be? What would be the contribution from this category?
Yeah, so a lot of these, there are twofold the benefit that will come out of this new visa scheme. One is immediately on tourism, and also it's in terms of facilitating investments into the country. And I would think bringing in the visa free, which is being trialed at the moment for India and the Chinese and all the other the 6 market segments that they have, it augurs very, very well for tourism and for the product. A lot of the other schemes, for education purposes and all that kind of thing, will do well in terms of investment. And when the economy grows, and when there's investment, and when there are expatriates and foreigners and students and all that kind of thing, it just adds to the consumption in the country. And that not only for in terms of hotels and tourism, but in terms of everything in the economy. So I think these things are good moves to make. It adds the competitiveness of the country, competitive of Sri Lanka, and I would think that overall, it's more than tourism. It's good for the country, but definitely this relaxation of visa-free travel, visa cost-free visas for travel to Sri Lanka is very positive, and we already seeing some of the benefits of that coming in.
Okay, so we talked about these regulations. Apart from the minimum room rates, which are in place, what are the negatives which need immediate correction to boost the industry?
Well, as you know, there's many taxes that we pay in terms of the revenues that we generate. So it's almost like, apart from the service charge that we have to pay anyway, it's about 10%. There's another about 25% in terms of taxes that we have to pay, whether it be the VAT and tourism development levies and the social service levies and so on and so forth, that everything that goes on top of that. So all this is an add-on and add-on and add-on that comes into the country. So that's basically challenging for the industry, and this is on the backdrop of an increasing cost base, which is whether it be the fuel, the electricity charges, electricity tariffs, and various other tariffs that goes on it. In addition to that, of course, the cost of consumables, the exchange rate makes all our consumption that much more expensive. So these are possibly some of the key things on the cost. But one of the biggest challenges that we are facing is actually people. The people to run the industry. So there is, and that's potentially one of the biggest dangers that we're running, with regard to the able to retain our skills, keep people in Sri Lanka. And this is possibly not specific only to the tourism industry. You see it right across the board in whatever industry we are. We are losing skilled staff to other countries. Be it the challenges in us being able to offer salaries which are internationally competitive, the high tax rates. Well, the tax rates have gone up in Sri Lanka, so it's pretty high compared to what it was. May not be high in compared to international standards, but it is still high. So all of these things are deterrents in terms of maintaining people. So one of the biggest challenges and that we see now is actually to being able to maintain the skills and thereby our service standards.
Right, so talking about the VAT impact, actually it is becoming a major concern because starting from next year it will be up to 18%. So will there be a demand shift because of this, or will the consumers get adapted?
Well, the cost is always concern because we have to pass it on to our markets, and then it's a price sensitive market. It compares against what each consumer pays in the competing destinations, and whether it's VAT or whatever that you add on to it, finally is the price that which our consumer pays out there, whether it be the ultimate consumer. So any price addition does have its challenges. So it's in the context of how competitive we are in our overall pricing, and with it all depends on the kind of arrivals and the kind of markets that we have. So yes, all these increases in VAT and all that will put us on a bit of a back foot. It will be challenging, but ultimately it's kind of what is the price that the consumer is willing to accept.
Yeah. So apart from the VAT charges, we talked a huge base in terms of cost. So apart from these, passing on the VAT charges, would the hotels be revising their prices up? Because as you mentioned, there is inflation and there will be escalated administration expenses.
Yeah. Hotels will have to keep increasing prices. As it is, our price base is quite low. I mean, if you look at our prices in terms of in dollar terms, it has not gone up since 2015, 16 price levels, right? We are flat. Colombo, in fact, is lower. Colombo, even if you look at the minimum rate thing that has brought in, still lower than what it was previously. So I think the prices are very low in terms of the rate that you get into your hand, the hotelier. The taxes have, of course, increased on top of that. And on top of that, we have the cost that is going up. So margins have eroded. So hoteliers will be compelled to review their pricing. So they will be forced into adjusting prices upwards, but this has to be done, as I said previously, in the context of what the consumer is also willing to uh, pay, because ours is an international market. There are competing destinations. There are destinations close to us which are also offering good products at the right prices. So we have to create a couple of things. We have to get a marketing campaign going. We have to create awareness. We have to create the demand, the pull into Sri Lanka, and only in the backdrop of that can we adjust our pricing. But we will have to adjust our pricing, otherwise the industry will die.
Okay, so we have noticed that most of the sorry, yeah. So we have noticed that most of the leisure sector players are entangled in debt. What is the situation with John Q's resort and city hotels, and is there any way out for the industry from this situation in the near term?
Yes. So, in terms of ours, our debts are managed because we have been servicing our debts, and we kind of kept above it. In terms of our gearing, yes, though the debts have increased, it's well managed. But what's really added to the debt is the fact that there have been not only to John Keys but to the entire industry, there has been consecutive years of losses, and obviously the losses have been funded through debt. And that's basically created a debt burden right across the industry going forward. So in the industry, as a Sri Lankan tourism industry perspective, the debt is a big issue. The moratoriums are off now, so all the debts are now basically payable. So that this is very much a concern across the industry, and this is also on the backdrop of the industry needed to raise more money to refurbish the product and renew the product to be ready for the future. So this is a big concern the industry wise. We are a little bit more fortunate because of the fact that we have been always on top of it. We have had the cash flow. We have a group network here. We have got diversification. We have got Maldivian assets and all that kind of thing, which kept generating the money. And we had the city and the resorts and all that kind of thing. So we are better off. But the debt is a big burden for the industry. I think it's one of the top line concerns right across the tourism industry. A is in service in the existing debt that they have, and also being able to fund in the future. I mean, the fund basically the maintenance of the asset going forward.
So, talking about the industry in general, wouldn't there be any more moratoriums or any restructuring plans for debt?
I highly doubt it in the context of where we are in this whole uh, process of our discussions with IMF and so on and so forth. I highly doubt that there will be any more moratoriums that will be declared. However, I think what the authorities are encouraging is for the hoteliers to deal directly with their lenders to work out their own terms of deferments or extensions or payment period extensions and so on and so forth, which the banks are cooperating with and cooperative to. So that's basically it is. But I highly doubt that there will be any moratoriums.
All right. So, how would the progression of Cinnamon Life Hotel affect other city hotels since it is a giant game changer type of a project? Moreover, would it like undermine the city hotels itself?
No, so it's Cinnamon Hotels, Cinnamon Life, and the whole complex is not built to take market share of the other. It is they are to create a new market in itself. That's how it has been positioned, right? And then it is basically to take Sri Lanka to another level. As I said earlier, Sri Lanka, all told, has basically got about 6,000 rooms. So there's a huge amount of capacity. Sorry, not Colombo, it's only got 6,000 rooms. So huge amount of capacity that Colombo can take Colombo can add. And that's what Cinnamon Life is there to create that whole buzz around Colombo, make this the icon of South Asia, so that it kind of becomes a magnet to attract people into Colombo for all sort of things, whether it's be for for meetings, incentives, conference spaces, events. That's what Cinnamon Life is going to be all about. It's just, basically being there to create a market that is not there and to make Colombo kind of, the epicenter of South Asia in terms of attracting people. And you can very well easily do because there's no product like Cinnamon Life in the whole of this region. Uh, in terms of what the overall offering that Cinnamon Life has today.
Okay. So overall, where does the Cinnamon Hotel stand as of now compared to others?
In the context of what
In terms of
compared to others?
ranking or how you could position the
Well,
Cinnamon City Hotels?
well, I couldn't answer that question. I think we possibly are the leaders in Sri Lanka in that context, but our positioning is to be a major player in the region, and that's where we really want to see. So it's more about where we aspire to go, and our aspiration is to create that brand Cinnamon as one of the best regional brands.
Okay. So are there any future strategies to expand the hotel chain with additions like Cinnamon managed hotels, for example, Cinnamon Red? Or overall, are there any new additions to the Maldivian or Sri Lankan Cinnamon hotels in the pipeline?
So at the moment, apart from Cinnamon Life, we have a Cinnamon Red that we are building in Kandy. So it's a similar Cinnamon Red model that's coming up in Kandy. We will be opening that also in the second half of next year. It's another 216 room hotel, and that's to make good use of to anchor ourselves on very firmly on the entire round trip and Kandy as the next growing thing. So those are the two investments that are happening right now as we speak. And yes, we are looking at expanding and more on asset light kind of expansion if we can. That is to join and work with people, with other investors in terms of expanding in our properties. But it will be very, very focused and very specific and keeping to what we need, what we feel is required, and what is being the requirements of the market in Sri Lanka.
Thank you, Mr. Rajendra. So those are the questions from my end. So now the platform is open for the audience to drop in their questions. We already have questions. Yeah, let's move towards them. What are the growth plans for Sri Lanka and overseas? There is speculation on Asian hotels and in particular Cinnamon Grand. Any comments? Expansion into other South Asian?
No, we have not got any plans of expanding into other South Asian countries. If there are opportunities that come for an asset-light kind of expansion, we look into it. So we basically are focused in Sri Lanka and the Maldives. And apart from that, we are not at the moment aggressively pursuing any other expansions anywhere else.
All right. So moving on, does the Middle conflict have an impact on Maldives as Israel tourists were banned from Maldives? It's like means Middle East conflict have an impact
Yeah.
on Maldives.
Okay, so it's not a huge impact. Not a huge. It had a little bit of impact when the Middle Eastern trouble started up, but we see that evening out. What concerned us more is the connectivity in the Maldives and what impact it would have through the connectivity, because a lot of the connectivity comes from the Middle East, but that's evened out. Israel in itself as a market is not a big market in the Maldives. So I think what impacted Maldives more is the recession in Europe than the war. But having said that, I think this is something that we need to keep watching and monitoring as we go, because any escalations would have a negative impact.
There's another question. What would be the impact of minimum room rate on Colombo city hotels and hotels out of Colombo?
Okay, so we dealt with that. So the minimum room rates are only in the city of Colombo, not outside. So it has had a impact, as I said, on it has had a positive impact in terms of taking our rates up. But we see that it has also impacted occupancies. But I'm overall more concerned about not losing out specific market segments like the MICE market, which could go to other countries. and not to Sri Lanka if we overprice ourselves in the five-star segment in a very price competitive environment.
Okay. So, with Cinnamon Life coming on board in financial year 2025, what's the occupancy target for that year for Colombo hotels together with Cinnamon Life Hotel?
I think the overall occupancy rate should remain as it is because what Cinnamon Life will bring in is a new client, new market altogether. And I would think that over time the occupancy rate should only go up. And
Okay.
I don't see Cinnamon Life as any threat to the to Colombo occupancies. And mind you, that there's ITC Sheraton opening next year as well. That's Intercontinental coming in as well. So there is, Colombo is going to become a destination in itself. And as I said, Colombo still has a huge amount of capacity to grow to, and the potential is massive.
Okay. Given that Cinnamon Life hotels offer mall plus casino, will the room rates remain below $60 if minimum room rate is removed?
No, no, Cinnamon Life will be positioned at a much, much higher rate. I cannot speculate on or I cannot speculate on or disclose any rate, but it will be positioned as possibly with the highest rate that hotel in the country or in Colombo for sure. Not in the country, in Colombo.
So, what is the expected impact of trends such as digital nomads who work remotely? Does Sri Lanka have the infrastructure to cater to this segment?
It does, and it is doing well. It's actually doing well. We see a lot of digital nomads now in Sri Lanka, and I think it's more than that. And then infrastructure is available, and also the environment is more available. I think that's a huge market in itself, and very very positive market.
Given the currency depreciation, has Sri Lanka become a cheaper destination or has domestic inflation made it just as expensive compared to peers?
No, Sri Lanka is a very competitive destination, but if you compare Sri Lanka against the other Asian countries, Sri Lanka is not cheap either. We are very much on par. I think that we are able to keep our pricing at a competitive rate because of the fact that our capacity is not huge, but we are not a cheap destination.
Another question. Has influencer marketing changed the trend of younger travelers spending more on luxury resorts, or is it promoting backpacker style travel?
No, it is both. It is basically influencer marketing has had a big impact on our marketing, both in terms of the luxury market segment as well as basically creating awareness for the country. And we've seen places like Ella and Narukambes and Hiriketias just basically going through the roof.
Okay. Have global political tensions and conflicts impacted travel trends? And if so, what is the impact for Sri Lanka?
Well, it will always have, it will have an impact on travel trends. But Sri Lanka, I would not say is more or less impacted than anywhere else in the world. It's just that there is basically a cautiousness of travel taking place in certain segments of the market. But overall, there is no huge impact. And I think this year, going forward, Sri Lanka will be positive in terms of its growth.
And has COVID impacted the historical expectations of MICE tourism now that online meetings and webinars have increased in popularity?
Well, it has impacted what I call the corporate travel in terms of businesses and meetings and all that kind of thing. So we've seen the corporate travel segment coming down, but not the mice because still the meetings, incentives, and the conferences market is very very active and it has grown. So what has impacted to after COVID and also this online kind of thing is really the corporate segment where people come in for just business meetings or something like that. But in terms of the bigger number arrivals, like what called the mice travel, no, it has not impacted.
What is the rough timeline on starting Cinnamon Life casino operation?
Well, as our chairman has also indicated previously, we would be operational in 2024 towards the latter half of 2024.
Okay, there's another question. How do you see adverse weather conditions impacting coastal hotels? Is the occupancy at low level compared to the expectations?
Not really, because Sri Lanka is seasonal, and the industry is aware of the seasons, and the markets are also based on the seasons. So no, that the weather conditions have no what you call a appreciable impact on our tourism at all.
Okay. If we have a boom in tourists, are we ready to cater to 5 million tourists?
Infrastructure will struggle. First thing that will struggle is the airport. The airport expansion becomes an absolute necessity. There is plans to do a quick expansion, at least on a temporary basis, because the first thing that will struggle is the airport. Airport to handle that number of tourists. Then, of course, it is the whole rolling stock that has to be looked at. The whether it be the buses, the cars, the vehicles to take people around. So they obviously we will have to start, investing in the rolling stock. There are at the moment, there are some kind of we just released. You can buy buses and all that now in the market after there being import restrictions for the longest time. So yes, the rolling stock will be having that, and of course then the occupancies will be the 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 hotel room numbers will also have to get augmented, but I can see that taking place. But as I pointed out earlier, the biggest thing will be people. We won't have the staff and the skills to service, and then that will become a biggest challenge, and then we'll have to start looking for labor and looking for labor from offshore even.
The Under 19 World Cup was to host in Sri Lanka, but due to ICC suspension, it's shifted to South Africa. Is this issue cancelled all your bookings?
Well, I mean, it will have its impact, of course, have its impact. So unfortunately, these things also happen.
Okay. Are we witnessing changing demographics when compared with pre-pandemic times? Like, for example, spending per tourist, preferred destination, etc.
I wouldn't say so. I wouldn't say that there has been a appreciable change in the demographics or their spending patterns. It's picking up slowly. The pickup has been a bit slow, but I think we will go back to the pre-pandemic kind of numbers and pre-pandemic kind of demographics as they go on. It's just that the market segments have shifted more than the impact of COVID, because there's more travel taking place from the Asian and South Asian countries. So therefore, the type of travel, the type of holidaying has changed a little bit compared to what it was, that old traditional uh, beach stays of 10 days kind of thing, to a more active kind of holiday mode that is happening at the moment. So that's been the more marked change that we are seeing in the recent past. And also the way they procure. Last minute last minute buying has become more prevalent online. Last minute, the OTAs, the brand.com sites become big sales engines as opposed to the old travel agent model. Those are the kind of market shifts that we are seeing.
How have forward bookings changed over the past few months?
Improved. We are quite encouraged by the forward bookings. For the rest of the financial year, forward bookings are looking good. I've been already on the books. We're almost like three-quarters sold in our hotels. Last minute bookings, I said, is prevalent. So the forward booking trend is actually quite positive. And if I were to take it forward, next year is looking pretty good as well. I think we will hit pre-pandemic on a month-on-month basis. I think we should be hitting pre-pandemic or pre-COVID or even pre-Easter bomb, 18, 19 numbers by January, February. We should be seeing January, February, March 2024, almost like what we saw in 2019, um, kind of thing. Then we're going back to that kind of situation. And we'll go back to 16, 17, 17, 18 numbers by the next financial year.
Another question, are there any countries that still have travel advisories against Sri Lanka, or have all such travel restrictions been lifted?
Can't answer that question. There are, from what I know, there is no advisories against travel, but lots of countries have got cautions, not only on Sri Lanka, cautioning people about awareness and staying away from crowded places and so on and so forth. But there's from what I believe now, there are no negative don't travel advisories on Sri Lanka. I may be wrong, but I believe that's the situation.
So, what is the best way to track the inflow of digital nomads, and is there an estimate of their daily spend compared to a typical tourist?
Uh, Sorry, I'm unable to answer that question because we are quite not in the market as such, not in the segment as such. Though I see that as a very attractive and a growing segment by volume, but I really am unable to answer in terms of yields because we are not in that segment.
Right. And what's the break-even occupancies for Colombo and resort hotels?
Well, it depends on the size of the hotels and all the kind of volumes and all that kind of thing. It has gone up now because of the cost base going up, but you need at least about 65%, 65% occupancies to break even.
Yeah, so that's all. We don't have any more questions in the chat box. So I would like to thank you, Mr. Suresh Rajendra, for giving us your valuable time and sharing your knowledge with us. We really appreciate your contribution. And I hope the audience got a good knowledge about the tourism sector and got answers for their questions, and that they would make smart moves in their investments going forward. So thank you, everyone. And we can conclude today's webinar by that. So
Thank you.
thank
It's
you.
been a pleasure. Thank you very much.
Thank you and have a good day.
Thank you.